Look carefully. 1, 2, and 3. What do we see here? Struggle. And the stock market is now tired. In my previous S&P 500 weekly technical analysis, I mentioned that because of this unusual and heavy manipulated movement on Friday, 6th of February, the manipulators are creating a kind of situation wherein they will keep the FOMO alive. And once that trap is formed, once the stock market S&P 500, Dow Jones and Nasdaq reaches to a particular level, then we will see the profit booking, heavy profit booking and the fall. So what we knew, that the market is manipulated and it will fall. Now question was when it will fall. For that I have given you a range in the Dow Jones, 50,000 to 50,500. And here in the Dow Jones I mentioned that when the Dow Jones moves in between 50,000 and 50,500, then 100% confirmation it will fall. It will have to give up. And when the Dow Jones will fall, then the S&P 500 and the Nasdaq will also come down. And this started to happen from Monday. However, on Tuesday it was clear that now the S&P 500, Dow Jones and the entire US stock market is unstable. And now it is going to give up. And this was my first update on Tuesday. And here I mentioned that this means that the range to the 50,500 is going to be the trigger zone that has strong potential to trigger the short-term fall for 1 to 2 days in the Dow Jones and then in the entire US stock market. Now the next question, when the Dow Jones fails and the S&P 500 fails, then where these indices will be coming back to? For the S&P 500, this was the level 685x at least. Why? To fulfill its technical obligation. But that was not possible. That was not possible at all without the help of the Dow Jones. On February 11th, in my first update here, I mentioned that Dow Jones. The Dow Jones failed and is coming into the condition wherein we can expect more and continuous fall to the 49,500. Either today means on that day, February 11th, or tomorrow or February 12th. So Dow Jones on 12th of February fulfilled its obligation to 49,500, and at the same time the S&P 500 on 12th of February fulfilled its technical obligation to the 685x. And because of this heavy fall on Thursday 12th of February, now it was clear that Friday there won't be any significant movement in the entire US stock market. And the S&P 500 on Friday is allowed to move maximum to the 687x or a little into 688x and not much. Now what next? Next comes the short-term reversal. Short-term reversal means the short-term bearish movement. What is going to trigger this, the short-term reversal? Nasdaq. And how the Nasdaq will trigger this, the short-term reversal? And how much more the S&P 500 can come down before it can see a reversal? What will happen to the Dow Jones? Or if there will be any chances for the new all-time high or not. All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of February 17th. Means from February 17th, which is Tuesday, to February 20th, that will be Friday. Monday is the holiday. So it will be a short week. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. In the first part, I will discuss the technical part, the technical chart. Okay, now we have a clear confirmation of the bearish crossover in the moving averages of the S&P 500, which the S&P 500 was registering for for more than 2-3 months. Okay, so I will show you this change in detail. Okay, and what will be its impact on the market. So technical part, I will cover the weekly and the daily chart. So I'll discuss the weekly and the daily chart, and I will show you what is the long-term trend and what is the short-term trend. Second part of the agenda will be probable movement. Means what is expected to happen in the S&P 500, Dow Jones, and in a manner to the entire US stock market in the coming week. Just like in the previous week I mentioned, it will move up toward the corresponding levels to the Dow Jones 50,000 to 50,500. Then it will come down towards 685x in the S&P 500 and 49,500 in the Dow Jones. So similarly, in this, the probable movement, I will discuss all of these, the bullish, bearish conditions, levels and zones, etc. So first, I'm going to start with the technical part. So guys, I'm going to discuss the technical part, and I've divided the technical part into the two charts, weekly chart and the daily chart. First, I am going to discuss the weekly chart. Weekly chart means one candle represents 1 week, one entire week. Okay. Now, let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, let's first discuss the candle. If you notice, it's a heavy bearish candle. Okay, and also after the week of 17th of November, okay, we are seeing the closing of the candle below the moving average. This is indicating bearishness or bearish pressure. Now, the next week is crucial, because if the second weekly candle, okay, the closing of the second weekly candle is seen below this, the moving average, okay, in that case, we will expect more fall, right? Now, this time, this candle is different from this candle, but that will be seen through the technicals, okay, not through the body of the candle itself. However, as of now, it's a heavy bearish candle indicating an initial or intraday bearish movement on Tuesday, okay, but there is no confirmation on the gap down open, just an initial or intraday bearish movement on Tuesday, okay. Let's see this, the last weekly candle of the Dow Jones. Okay, this is the weekly chart of the Dow Jones. Again, well, it's not a heavy bearish candle. It's a good bearish candle only. All of the closings of the Dow Jones are still above the moving average. Okay, so it's in a better condition as compared to the S&P 500 or the Nasdaq. As of now, Nasdaq is suffering the most. Okay. Now, the candle, the last weekly candle of the Dow Jones, okay, it's a good bearish candle, only indicating an initial or intraday bearish movement, no gap down open, okay, nothing like that. Secondly, this candle is not indicating or is not in a condition to trigger the fall or the heavy fall, whereas this candle of the S&P 500 is in a condition to trigger fall or heavy fall. Okay, so that is another difference. So overall, initial or intraday bearish sentiments on Tuesday, okay, February 17th. This is through the candles. Now let's analyze the technical indicators, and then we will see whether the stock market has still the potential to trade bullish, okay, or not. Through the technicals, the S&P 500 is bullish through the Bollinger Bands, bullish through the Ichimoku cloud, and is neutral through the moving averages. Okay. Then the S&P 500 on the weekly chart is bearish through the MACD and is also bearish through the stochastic RSI. Okay, when this candle formed in the last week, then the stochastic RSI changed to bullish, and that was forced bullish, compelled. The S&P 500 was compelled, pushed to give to get the bullish crossover, okay, through the stochastic RSI that was there. Okay, and this is something that I've explained in detail in the previous S&P 500 weekly technical analysis. Okay, however, this time it is bearish, okay, good bearish, heavy bearish, okay, no saturation, nothing, no overbought and no oversold. So overall, the S&P 500 is now coming into a condition wherein we will say S&P 500 is now 60% bullish on the weekly chart. Okay, 60% bullish, but is now under pressure. It is now under pressure. Okay. So I will show you, I will discuss the MACD and stochastic RSI in detail, but first let's cover the Dow Jones. This is the chart of the Dow Jones. Dow Jones is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the weekly chart. Dow Jones is bullish through the MACD on the weekly chart. This thing is not changing. Last time this was the week of 17th of November, we have seen a little breach. Okay, then the entire US stock market was heavily manipulated, okay, to keep the technicals bullish, and since then we have seen linear movement. There was one more condition the week of 26th of January, but again Okay, because of the heavy manipulation in the week of 2nd of February, that did not happen, and but now it is coming into a condition wherein, if all goes well, if the next week gives a red candle, then it will come into the condition to the MACD of the Dow Jones will be in a condition to give the bearish crossover. The stochastic RSI is bearish. Well, that's the good thing. Okay, no saturation, no overbought. Okay, nothing like that. So Dow Jones is good. Dow Jones is like 80% bullish on the weekly chart. So what does 80% in the Dow Jones and 60% in the S&P 500 on the weekly chart means? This means that the long-term trend is still bullish. It is still bullish. Whatever we are seeing, this fall, struggle, okay, that is in the short term. Okay, but the long-term trend is still bullish. There is no change in the long-term trend. Okay, now let me show you the MACD and the stochastic RSI of the S&P 500, because that is something which is going to create a problem for the entire US stock market, okay, including the Dow Jones. Earlier it was the Dow Jones, but now Dow Jones will feel pressure through the MACD and the stochastic RSI of the S&P 500. Now, what we can see here is that MACD is giving linear movement, linear bearish movement, okay, from the week of 17th of November. And this is the S&P 500 weekly chart. Then we have seen very rough movement in the stochastic RSI. Okay, confirmed bearish crossover, then pushed up. Okay, then confirmed bearish crossover, then pushed up, then again down, then pushed up, then now, okay, it's again down. So whenever there is a condition when the MACD and the stochastic RSI are both are bearish, then again and again I've repeated this thing. This indicates bearish pressure, bearish momentum. Okay, only through the heavy manipulation this can be changed. Otherwise, technically it is not possible, because first it will complete its cycle, then only there will be the change. Okay, so what we have seen earlier is that when there was such kind of scenario, this was the week of 29th of December. Okay, we have seen bearish MACD on the weekly chart, bearish stochastic RSI on the weekly chart. Okay, this was a confirmed exactly the same condition. Then what happened in the week of 5th of January? Very heavy bullish push. Open equal to low condition, almost open equal to low condition. It moved up. There was forced. It was forced. Okay, there was a forced change. Okay, in the technicals, right? Then there was this condition in this week. Okay, we have seen the fall. Then next week, in the means last to last week, we have seen very heavy manipulation on that the Friday. Okay, it then again forced, but now there is heavy fall. Okay, this is the condition. Very rough movement indicating that the market manipulators, they were trying to keep the bullish sentiments alive, and they were building the traps regularly. They were building the traps to book their profits. Okay, but now this situation is so much clear. So if you see the intensity of the stochastic RSI, okay, this is very heavy as compared to the previous one or the previous one. This one is very heavy. This means that now there must come at least two good or heavy bullish candles, weekly candles, then only it will change to bullish. Otherwise this will not change. What does that mean? This means that the stock market, the S&P 500, okay, it has now come under pressure, and we are now expecting more fall in the market, and this fall will continue this fall will continue unless the S&P 500 hits the saturation either on the weekly chart or on the daily chart. The fall will continue because this time the situation is different. Okay, then what will happen to the Dow Jones when the S&P 500 comes down? Okay, and the Dow Jones, then it will bring the Dow Jones, okay, it will bring the Dow Jones down. There will be the fall, bearish movement that will then trigger the bearish crossover. Now this can happen in the next week, the week of 17th of February, okay, or in the next week, the last week of February. Okay, but one thing that we know, once there comes a confirmed bearish crossover in the Dow Jones, the MACD of the Dow Jones, okay, then stochastic RSI, it is already bearish. In that case, the indices S&P 500, Dow Jones, Nasdaq, on the weekly chart, we will see the combination MACD is bearish, stochastic RSI is bearish. This means that now the entire market is going to give up, and to give up heavily. Okay, now the market has started the short-term bearish cycle, through the Nasdaq. Okay, but that will not be realized until and unless S&P 500 on the daily chart comes into a specific condition. Okay, only when the S&P 500 comes into the specific condition, the Dow Jones will be compelled to enter into the condition. Then we will not have to wait for anything else. Then the market by default, it will come down. Entire market will come down. It will then complete its short-term bearish cycle. If it sustains and survives in the short-term bearish cycle, what is the short-term bearish cycle? Okay, at least 5%. 5 to 6% is the minimum in the short-term bearish cycle. What was the all-time high of the S&P 500? 7002. What will be the 5% or 5 to 6% fall? In the 6,600 or a little into the, or not little, but into the 6,500. Okay, that will be the short-term bearish cycle. And guys, there is one more thing. Okay, so this is what I mentioned to my Patreon community members also, that if you think that I am giving you the movement, and there is a movement, the fall or the rise, okay, and if you think that I am using the different numbers or level, then no, that's not the case. I'm also using the same numbers, the same levels, okay, for the trade setups. So whatever I'm giving through these, the daily precise updates, the S&P 500 and the Dow Jones movement, exactly I am using the same. Okay, the same method, the same trade, the same numbers. Now we will get more clarity through this, the daily chart of the S&P 500 and the Dow Jones. Okay, so now we have moved from the weekly to the daily chart. So daily chart means one candle represents one day. Okay, one entire day. Now, before I discuss the daily chart, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. Now, let's discuss the daily chart. First, the candle. If you notice, okay, a very limited candle, very limited bullish candle. And secondly, the candle, the closing of the candle was below the moving averages and also inside the Ichimoku cloud. Okay, so all of this is indicating pressure. This means that on Tuesday there will be an initial or intraday bearish movement. Okay, again guys, let me remind you that Monday is the holiday. 16th of February is the holiday. Okay, 17th of February the market will open, and 17th of February is the Tuesday. So on Tuesday, okay, we are expecting an initial or intraday bearish movement, right? Now let's get the confirmation through the Dow Jones. Dow Jones, almost the same. Okay, not exactly the same. S&P 500 is under more pressure as compared to the Dow Jones. So Dow Jones, the candle of the Dow Jones is actually a little bullish in nature, is indicating initial or intraday bullish movement on Tuesday. Not bearish movement, no gap up, no gap down, but just little, okay, initial or intraday bullish movement on Tuesday. This is what the candle of the Dow Jones is signifying or is indicating. Okay, now considering the weekly candles, the daily candles, okay, now it is clear that chances for the bullish side are limited and are restricted, but at the same time bearish side is open and we are anticipating an initial or intraday bearish movement. If the market, if the S&P 500, Dow Jones try to move up, the indices will struggle in the bull side. Okay, so this means that on Tuesday we will see more pressure. Okay, some bearish side movement, limited bullish side movement. Okay, bullish side movement will heavily depend on the number, the level. In case of the S&P 500, it will heavily depend on the 685x. Okay, very simple. Now let's analyze the technical indicators to get more clarity. Technically, it was, yes. So technically S&P 500 is bearish through the moving averages. Why? Because there is now a confirmed bearish crossover. This bearish crossover was happening on Friday 6th of February, but then we have seen very heavy manipulation and the bearish crossover, okay, it did not happen on that day, but now there is a confirmed bearish crossover. So S&P 500 is bearish through the moving averages on the daily chart and is bearish through the Bollinger Bands on the daily chart and is neutral through the Ichimoku cloud on the daily chart. Now, the S&P 500 is bearish through the MACD on the daily chart and is bearish through the stochastic RSI on the daily chart. Okay, no saturation and nothing. This means that now the S&P 500 is 80% bearish on the daily chart, and finally it has entered and is giving the closing into the Ichimoku cloud after many weeks, after December, mid of December. Okay, we are seeing this kind of, not actually mid of December, this was actually November, because in the mid of December, on 17th of December, we have seen only one closing inside the Ichimoku cloud, but now we are seeing two consecutive daily closings inside the Ichimoku cloud. So finally the S&P 500 is bearish. Okay, and now let's get the confirmation through the Dow Jones. Dow Jones is still holding bullish through the Bollinger Bands on the daily chart and is neutral, not bearish, but is neutral through the moving averages on the daily chart and is bullish through the Ichimoku cloud on the daily chart. Okay, the MACD. Okay, yes, finally we have some confirmation. The MACD of the Dow Jones is bearish on the daily chart. Stochastic RSI was already bearish, so now the MACD and the stochastic RSI are bearish in case of the Dow Jones on the daily chart. Okay, so this makes the Dow Jones 60% bullish on the daily chart, right? S&P 500 is 80% bearish on the daily chart. Nasdaq is 100% bearish on the daily chart. Dow Jones is 60% bullish on the daily chart. Okay, S&P 500 was 60% bullish on the weekly chart. Dow Jones was 80% bullish on the weekly chart. This means that whatever bullishness is there in the market, in the US stock market, is only and only because of the Dow Jones, and that's it. However, this is now not going to work in favor of the Dow Jones. Why? Because now the MACD and the stochastic RSI on the daily chart of the Dow Jones are bearish. See, both are bearish. This combination of the bearish MACD and the bearish stochastic RSI on the daily chart of the Dow Jones will bring more pressure, more bearish pressure, more bearish momentum in the Dow Jones. Now, the another interesting thing is that exactly the same is there in the S&P 500. The MACD is bearish on the daily chart and the stochastic RSI is bearish on the daily chart. Okay, so the pressure, the bearish momentum is there through the S&P 500. Okay, exactly the same is there in the Nasdaq. Okay, so Nasdaq is 100% absolute bearish and is in the short-term bearish cycle. Okay, Nasdaq is an early indicator for the US stock market that tells us that what is expected to happen in the S&P 500 and in the Dow Jones. Okay, most of the times Nasdaq gives the false signals. Okay, that is why we use the numbers and the levels, but my numbers and the levels will give us a very clear confirmation of the picture. Okay, as of now that is indicating the bearishness, right? So now finally the good thing is that MACD and the stochastic RSI both are bearish in the S&P 500 and in the Nasdaq and in the Dow Jones. Okay, indicating pressure. There is a little problem in a manner that the Dow Jones has just given this, okay, very limited bearish crossover. Okay, and if the only and only if there is only one known case, there is only one known case that can help the Dow Jones to get a very heavy bullish candle on Tuesday, and that can then force the MACD to recover to bullish. What will be that? That is the pure manipulation. Without pure and without 100% manipulation, this is impossible. Okay, why this is impossible? Because exactly the same condition is there in the S&P 500 and in the Nasdaq, and now there is a clear confirmation the bearish crossover in the moving averages. Without manipulation, it is impossible to trigger the bullishness, the bullish change in the MACD. This means that now the entire US stock market has come into the condition wherein we can comfortably say that the short-term bearish cycle is there. There are now just one or two conditions. That's it. Okay, once these conditions are fulfilled, then the short-term bearish cycle will resume, continue, and for now that is allowed up to the 6,500. But guys, whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 and the Dow Jones, which I give to my Patreon community members every day from Monday through Friday. I give the pre-market analysis before the open of the stock market. Then I give the first update after 1 hour. Then I give the midday update after 3 hours. Then I give the final update 1 or 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of what is happening, what is going to happen. And guys, it's not just about the daily precise updates, but I also give the opportunities in the premium stocks of the US stock market, in the premium stocks and the ETFs 30, 30 to 50. And that's not all. But I also give this the midweek update. It is a video technical analysis generally given every Wednesday, mid of the week, and all of the numbers, levels, everything is precisely and clearly mentioned. So guys, whenever you want to join my Patreon community in order to get all of these, the daily precise updates, the midweek update, video technical analysis, and the premium opportunities, then I've given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page. This is my Patreon profile. And here on my Patreon page, you will see this button which says membership options. And when you open this button which says membership options, then you will see that there are the 3 levels, level 1, level 2 and level 3. When you subscribe to level 1, then you will be getting all midweek update videos and the daily SP 500 precise updates, movement, levels and zones. When you subscribe to level 2, then you will be getting all midweek update videos, premium opportunities 30 to 50 in the stocks, ETFs, and the daily SP 500 precise updates and movement. Level 3 is a premium level. When you subscribe to this level, then whatever you are going to get in these 2 levels, by default you will get here all midweek update videos, daily precise movement of the S&P 500, Dow Jones, the premium opportunities 30 to 50. Other than that, there will be a Zoom video meeting of 2 hours, and through this the Zoom video meeting, one-on-one Zoom video meeting, I will teach you one strategy, one premium hack, and one premium technical indicator in detail and how to use to predict the bullish and the bearish movement, sudden change and the trap, etc. These are the secrets. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones every day from Monday through Friday, as well as these are premium opportunities in the stocks and the ETFs and the midweek update video technical analysis. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, which is for the week of February 17th. Means from February 17th, which is Tuesday, to February 20th, that will be Friday. Okay. So here I will give you the probable movement, means what is expected to happen in the stock market, in the S&P 500, in the Dow Jones and the Nasdaq, and in this manner the entire US stock market. Okay. What will trigger the fall, what will trigger the bullish movement, okay, what numbers and zones will have. Okay, now the first thing first, okay, the events for the next week on Wednesday, okay, during the day at 2 p.m. Eastern time, the FOMC minutes of the meetings of the recent meeting, FOMC meeting will be released, okay, and we will expect some volatility because of these, the minutes. Okay, then comes most important, Friday before the open of the stock market, PCE and the core PCE data will be released, inflation data. Recently, the CPI data was released, okay, in the previous week. That was, as per the expectation, only the core CPI month on month basis, okay, that has increased a little. Otherwise, everything was under control. Now, the market will get the same confirmation through the PCE and the core PCE, okay. If this also suggests or supports, okay, that yes, the economy is holding and the inflation is under control, in that case we will expect a good bullish reversal or the bullish movement on Friday. Means that it may happen that Tuesday, Wednesday, Thursday the S&P 500, Dow Jones and the stock market may trade bearish, and then finally on Friday, if the PCE inflation data comes in favor, then we will see heavy intraday bullish reversal. This is also important because the coming Friday, 20th of February, okay, will be the monthly expiry. Okay, monthly expiry of what? The options, the futures and the options. So if you do not know, okay, about these options, then I have these some programs, okay, where I teach in detail, okay, these the options strategies, the options calculator, okay, each and everything. So you can check for that in the description and also in the comment section. Anyways, because the February 20th is the monthly expiry, weekly as well as the monthly expiry, okay, this means that whatever will be there on Friday, it will be heavy. Means if there will be the fall, then the fall will be heavy, and if there will be the bullish movement, then that the bullish retrace will be heavy. Okay, this bullish retrace will be very heavy if on Tuesday, Wednesday and Thursday we see three successive red candles, and then the inflation data comes in favor of the market, very heavy bullish recovery. But that heavy bullish recovery does not mean that it is going for the 7,000. No, it will stuck into the 6,800. Why it will stuck into the 6,800? Because that recovery will happen either from the 6,600 or from the 6,700. Okay, so why that will happen? Now for that you need to understand. Okay, so now let's talk about the numbers, levels and these things. Before the S&P 500, it is the Dow Jones. Dow Jones, the all-time high was 50512. Okay, this will remain in the picture as is. Okay, there is no change in the zone. Even if it try to move up, then also it will struggle and fail. Okay, now it is allowed to move up a little. Okay, just a little above this, the previous all-time high, the recent all-time high made on 10th of February, but not much. Okay, however, irrespective of anything, the Dow Jones will fail. Because the Dow Jones, the bullish side in the Dow Jones is restricted and that it will fail. This means that the bullish side in the S&P 500 is also restricted and it will fail. The 7002, the all-time high of the S&P 500, is expected to remain as is. Okay, means for now we are not expecting any all-time high in the market. This for the all-time high to happen, two conditions must be, sorry, not two. Okay, either of these two conditions must be fulfilled. What are these two conditions? Number one is the very heavy manipulation. Okay, so if there comes this the manipulation, okay, in that case everything is possible, okay, through the manipulation. But that will not be just the manipulation, it must be very heavy manipulation, because now the market is already under pressure. The S&P 500 is under heavy pressure, Nasdaq is under heavy pressure, Dow Jones is coming into the pressure, under pressure, Dow Jones. Okay, so a very heavy manipulation is needed. The second reason is it is not the FOMC minutes of the meetings, but it will be the PCE data, the PCE and the core PCE data. However, this data will be released on Friday. Okay, so before Friday, only the manipulation can help, otherwise nothing will help. Okay, when I say that nothing will help means that the market, stock market, the US stock market will remain under pressure. S&P 500 will remain under pressure. Nasdaq, etc. will remain under pressure. Now, pressure will bring the S&P 500 down. Okay, down to what? But for that, you need to understand S&P 500, why the S&P 500 did not come down heavily on Friday. Why it was hesitating to come down? Because the low on Thursday, 5th of February was 6780.13. Okay, and on Friday I have repeatedly mentioned in the pre-market analysis, then the first update to my Patreon community members, okay, that S&P 500 will remain hesitant. It will remain hesitant and will avoid losing or breaching the 6780.13, because once it's gone, then it will have to fall. There will not be any other thing, like nothing will save. It will have to fall. It will have to come down heavily deep into the 6700 range. Okay, now exactly the same will help the S&P 500 for now, or as long as Dow Jones is not breaching the low of this candle 6780.13, the S&P 500 will remain in a condition to move up and to try for these the moving averages. Okay, but now there is like barrier is the 6900. Okay, moving averages are around the 6900, then the Shimoku cloud is like the 6880 or 6870. So now there is very heavy pressure, very heavy resistance zone for the S&P 500 for now. Okay, for now the S&P 500 is going to trade in between the low of this candle 678013 and the 6900. That's it. Now for the movement to happen, S&P 500 either must breach, okay, this the cluster of the heavy resistance zone, okay, and to move up and to sustain on the hourly, 4-hourly and the daily closings. It must give, okay, these the closings above, okay, this cluster, then only it will be in a condition to recover and to re-enter into the 6900 and then to sustain within the 6900, or it must breach the 6780.13 and then start to give the closing below this, and then, okay, the fall, the usual fall. Okay, so for now this condition will be applicable to the S&P 500 no matter what is happening in the Dow Jones. Okay, now Dow Jones, there is clear that if the Dow Jones fails to recover, especially on Tuesday, if it fails to recover, comes under pressure, okay, then S&P 500 will be compelled, it will be forced, it will be compelled to come down and to breach the 6780.13. Once the 6780.13 is breached, more bearish sentiments, and then if we see the hourly closings, consecutive continuous hourly closings below 6780.13, then more and more bearish sentiments, okay, then there will be the fall. Okay, then S&P 500 will not be able to hold for long. Now when it comes down, then the S&P 500, then to what level it will be coming down, what will be able to hold the fall in the S&P 500? For that, it will be 674x, a heavy support level for the S&P 500. This will be the support level, and because the boundary of the Ichimoku cloud itself also act or work as the support and resistance levels, so my level 674x and the boundary of the Ichimoku cloud, both of these will combine and will provide a good support zone. And when this will be happening in the S&P 500, then at the same time the Dow Jones will be coming down to what? Dow Jones will also be coming down to hit the boundary of the Ichimoku cloud. Okay, other than that, the low of the Dow Jones that are a little into the Ichimoku cloud itself. This low was 48459.88. This low was 48428.13. So the 48428.13 of the Dow Jones. Okay, this level. So whenever the Dow Jones comes down and there is heavy fall, then that fall will be handled by the boundary of the Ichimoku cloud and this the 48428 and the level that is also there in the 48400 range. Okay, these three will create a very heavy support for the Dow Jones. Because the Dow Jones is going to get very heavy support, because the S&P 500 is also going to get the good support. This is a good support, not a heavy support. Okay, I repeat, it is a good support. Where is the heavy support? Heavy support is in between the 6700 and the 674x zone. There is the very heavy support. This means S&P 500 can even lose the Ichimoku cloud. Okay. However, the closing will matter, right? If the closing is still inside the Ichimoku cloud, it will remain safe. Okay. It is in the short-term bearish cycle. Okay. But that short-term bearish cycle will be confirmed only when there comes at least 2 consecutive daily closings below the Ichimoku cloud of the S&P 500. Otherwise, there will not be any short-term bearish cycle. It will stop here. That's it. The fall will stop here and then the recovery. And exactly the same we can see here through the Dow Jones. The Dow Jones is here. The low of the candle is here. Okay. Then my level is also there. Okay. Then the boundary of the Ichimoku cloud itself. So this is going to create a very heavy support. Dow Jones need not to enter heavily into the cloud. Okay. But if it does, then it will be only and only because of the S&P 500. Because S&P 500 is in that condition. Why and how the S&P 500 is in that condition? Because now there are 2 consecutive daily closings within the Ichimoku cloud. This is a rare, not rare, but this is happening after, you can see November. Okay, November 18th, 19th, 20th, and then 21st of November. For 4 days, the closings were within the Ichimoku cloud. Okay, then there was only 1 closing within the Ichimoku cloud, but it recovered. Okay, now these are 2 closings. So if you have subscribed to my YouTube channel for last many months or years, I always emphasize on two consecutive, 2 successive closings, whether it is about the Ichimoku cloud, whether it is about the moving averages or any other technicals or my level. 2 consecutive closings at least. Okay, because this will then rule out the possible trap, right? So now, because these are 2 consecutive closings, other than that, there is a confirmed bearish crossover in the moving averages. There was a slip. This was the manipulated slip. That is why it failed. Okay, technical slip would have sustained and would have triggered a bullish movement, but this was manipulated slip. That is why it failed. But now there is a confirmed technical crossover. Okay, because of this condition and this condition, we are seeing the fall in the market, the bearish pressure in the market, in the S&P 500, in the Nasdaq, and also in the Dow Jones. Okay, so this time picture is different. There is very heavy bearish pressure. Okay, so bullish movement, okay, I will discuss, but before that, let me cover the bearish movement. Okay, now what will happen if the fall does not stop? If there comes 2 consecutive closings before Friday. Okay, Friday PCE data will be there. Okay, so we do not know what will be the outcome, but what we know is that if there are these 3 red candles on Tuesday, Wednesday, Thursday, or if there are 2 red candles, or if there are green candles, but these green candles are within the Ichimoku cloud. Okay, so any condition which is bearish, not bullish, before Friday, and then on Friday the PCE inflation data comes in favor of the in favor of the Wall Street, then we will see heavy recovery. Okay, because it is still in the 6,700 range, so the recovery for now will be limited to the 6,800 range. Okay, like 1.5% recovery we can say, but still it will be within the 6,800 range within a day. Then we will have to see if it has cleared the levels, the zones, the numbers. Okay, and if it is in a condition to move up further, or if it will simply fail. Okay, so that will basically depend on the inflation data, and in my pre-market analysis, once the data is released, then I will mention whether it is positive or negative and what will be its implication. Okay, so recently we have seen that when the CPI data was released, then I mentioned that the CPI data is bullish. Okay, Wall Street should it should be happy, okay, that it is a positive data and there should be positive sentiments. But because after the data was released and the futures were not trading green, futures were flat, this was confirmed, then this positive data is not going to help, we will see the fall. Okay, in my pre-market analysis, then in the first update I have cleared this thing. Similarly, on Friday, okay, when this happens, then I will confirm whether there will be a fall or the bullish movement, etc., etc. Okay, in the pre-market analysis and then in the first update. So so bearish side, yes. Now bearish side is open to what? Bearish side is wide open to the 6,500. Okay, there is no problem. Until to 6,500 there is no problem. 6,500 range, not the psychological number, range of the 6,500. Before that, well, I doubt, because when it enters into the 6,600, okay, then there is very heavy support range in the 6,600. That support range will not allow the fall. Okay, S&P 500 will have to fulfill its obligation to hold and sustain at the zone in the 6,600. Okay, and at least for 1 to 2 days it must hold, sustain around and to close. Okay, but because it is a short week, only 4 days, this means that any kind of fall will now be handled in the 6,600. 6,500 is not expected in the week because only 4 days are there. 6,500 will come into the picture only and only if the S&P 500 is trading bearish on Tuesday, Wednesday, Thursday, and then on Friday there comes the inflation data which goes against the Wall Street. Then that will trigger a very heavy fall on Friday, because it will already be bearish. That heavy fall will then breach this, the heavy support zone in the 6,600, will help the S&P 500 to enter into the 6,500 range. So this is there in the bearish side. Bullish side, is bullish side possible? Yes, it's possible. Okay, but how the bullish side will be possible? So guys, before I tell you about this, the bullish side, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then give a thumbs up, hit like to appreciate, and your appreciation matters a lot. And guys, other than that, if you want to get these daily precise movement and the updates, numbers, levels of the S&P 500, and the Dow Jones every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, bullish side is possible, but there will be struggle. There will be a struggle in the bull side. Why there will be the struggle? Because as of now, there is no saturation in the bearish side. Okay, and if you are my Patreon community member, then on Friday, I mentioned that by giving the hourly green candles, S&P 500 has come out of the condition that was supposed to trigger the bearish. So you can see it here. That here I mentioned that because the first hourly candle on Friday was of the green color. Okay, because of that, the SP 500 was not into the saturation on the lower level charts. Okay, it has actually come out of the saturation, because if the first hourly candle would have been red color, would have been a red candle, bearish candle, okay, then by the mid of the day there would have been extreme saturation in the bearish side, and then the second half on Friday, okay, we would have seen a good heavy, or this the intraday good bullish recovery. This is why on Friday the bearish side was comfortably open to the 6,700 without any problem. Means any bullish movement we will see this struggle in the 687x, okay, with some possibility in the 8x, 688x on Friday, maximum in the bull side struggle, and it will fall. Why? Because of this condition. And exactly the same thing, okay, we can see through this, the green candle that was seen on the daily chart. See, 1 2 3 red candles, fine. This has pushed, let me show you the technicals. This has pushed the MACD and the stochastic RSI, okay, turned, okay, this is the bearish, and was pushing these the technical indicators to hit the saturation. But then came the bullish candle, the green candle on Friday. This green candle has now disallowed the saturation in the bearish side. This means that now if there comes consecutive successive three daily red candles, like Tuesday fall, Wednesday fall, Thursday fall, then also it will not hit the saturation. Okay, on the lower level charts, intraday it will hit the saturation, that's a different thing. But on the daily basis, okay, it will not hit the saturation, only because of this, the green candle, because this has now created some more room in the bearish side. Okay, three successive bearish candles on the daily basis until Thursday are allowed without any problem, without any saturation. On Thursday itself, intraday, it can hit the saturation, but otherwise it is allowed. Okay, exactly the same we can see in the Dow Jones. Okay, the same movement, the same everything, but here in the Dow Jones there are only two red candles. Okay, see, there are only these are two red candles, 1 and 2. So Dow Jones was not in that kind of or in any kind of saturation or any kind of oversold or that the condition. So Dow Jones has more than enough room to fall. Even if there comes like 1, 2, 3, 4, 5, then also the Dow Jones, okay, will not hit the saturation or the oversold condition. This means that if there comes the good fall or heavy fall, then also that fall is allowed. That fall is allowed. The only barrier or the only support for the S&P 500 is the boundary of the Dow Jones, boundary of the Ichimoku cloud on the daily chart, and also the level that is there in the 674X. Okay, my level, that is the only support. Once it loses, then there is a good support, not good, sorry, heavy support zone in between the 6700 and the 674X. Okay, then that will hold. Otherwise, once both of these two are gone, then there is nothing to hold. Then it will enter into the 6600 with some possibility for the 6500. Okay, so for the bullish side to happen, S&P 500 is allowed to move up. Move up to what? Move up to the cluster of the moving averages and the Ichimoku cloud. Okay, for now this is around 6900, but because these are the moving averages, okay, so the value change, the value of the moving average will change, okay, with okay, every second when the market gives bullish or bearish. Okay, but we are talking about the daily chart. So when the market closes, then only we will get a confirmation. However, through my numbers, okay, and the other technicals, we can get the confirmation within the first hour. Okay, and we need not to wait for the entire day. This means that as of now, any bullish side movement is limited, okay, restricted, and there will be a struggle. Now, most likely these moving averages can enter into will be around 6800 8x, 688x or 6807x, okay, on Tuesday. Okay, so this is going to put pressure. This is going to restrict the bearish side movement, okay, to the numbers like this. Okay, then this will change on Wednesday to some other level or so. Okay, now problem will happen when the moving averages comes down, okay, enters into the Ichimoku cloud, means moving averages enters into the Ichimoku cloud and are in the 685x. This will create a very heavy resistance and very heavy pressure on the S&P 500 that S&P 500 will not be able to hold. Will not be able to hold this pressure, and we can see like heavy fall like this, like this, like this, or like this. We can see very heavy fall. Okay, so now the good thing is that S&P 500 will try to avoid coming into this condition. Will try to avoid the formation of this condition. Okay, so it may give like some bullish movement, or it may try to give some bullish retrace also, but eventually, okay, it is expected to fail. If somehow, okay, manipulated or non-manipulated or whatever may be the reason, if somehow S&P 500 recovers, okay, recovers what? Recovers the 6900. Recovers the 6900, but technically it should recover the moving averages. The closings must be above the moving average. So whenever there is a recovery and it is above the moving average, the value of the moving average will be known only when the market, the S&P 500 or the US stock market comes into the session on Tuesday. Once there comes the hourly closings, 4 hourly closings, daily closings above the moving average, then that will change the picture. Okay, because that will then we will see that S&P 500 is going to enter into the 6900 range. When the S&P 500 enters into the 6900 range, it opens the possibility, some means limited possibility for the all-time high. to happen, the 7002 is the all-time high of the S&P 500 as of now. Okay, it will open some possibility. For now, there is no absolute possibility, because we need to look into the Dow Jones also. Okay, Dow Jones is okay, the bullish side of the Dow Jones will be limited, and there will be struggle, and then there will be fall. This is what we know. Okay, so S&P 500 will have to follow the Dow Jones, and to make the situation, or to make the matter worse, there comes the Nasdaq. Okay, Nasdaq has entered into the short-term bearish cycle. Nasdaq does not need any more confirmation. Nasdaq is 100% bearish on the daily chart, and it has entered into the short-term bearish cycle. Okay, so bullish side will be still remain limited within the 6,900. Okay, 695x. Okay, at most, if all goes well, if somehow I do not know what will that be, whether that will be manipulation or not. So as of now, technically that is not possible. Only through manipulation that is possible. If it moves up, some kind of like this kind of heavy push or so, and it moves up, enters into the 6,900, then what will happen? It can move maximum to the 695x, and then it will fall. Okay, because it has to fall. Why? Because Nasdaq is in the short-term bearish cycle. Okay, so Nasdaq, whatever bullish retrace will be there, and even in the Nasdaq, that bullish retrace will be towards Ichimoku cloud, and then it will fall. Okay, so S&P 500 will move up, but again it will have to fall. This picture will change on Friday. Why it will change on Friday? Because of the inflation data. Because if there comes the inflation data which is in favor of the Wall Street, in favor of the US stock market, then that day we will see a mix of the technicals, the bullish pressure, and the manipulation. There will be a mixed, okay, this thing, but one thing is clear: there will be very heavy bullish push. Okay, this bullish push has the power, okay, to help the S&P 500 to regain and to re-enter into the 6,900 range, and to sustain within the 6,900 range. Okay, but for all of that to happen, S&P 500 must not lose the Ichimoku cloud before Friday. It must not lose. Once, if it loses this Ichimoku cloud, then even this, the manipulated push, the better than expected, okay, data also won't be able to help okay much. And then, because see, now you need to understand that now we are in a cycle where we will say that you short, okay, short on the lower highs. Okay, it will come down, then it will form, then come down to form, and then come down. These are the lower highs. Okay, this will give you an opportunity to short. Why? Because of the short-term bearish cycle. But guys, once again, whatever is going to happen or whatever will happen, I will keep you posted through these, the daily precise updates, which I give to my Patreon community members every day from Monday through Friday. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section, or you can send me an email. I have mentioned my email in the description of the video and also in the comment section.